Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, July 15th, 2022. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Your likes is literally the fuel that keeps this channel going, so please, it doesn't take a long time, just hit the like button. Today we will talk about stocks that have possibly bottomed and formed a hammer candlestick, and this is a weekly chart, so it's more meaningful than daily. Similar picture is happening to bonds. At least they didn't make a new low, and a bullish candlestick also was formed. Taken together, this is good for stocks. Unfortunately, yield curve partially inverted, and I will describe and explain why this could be bad for stocks. Dollar may have topped. We will look at gold to see if gold has indeed possibly bottomed also. And Bitcoin really didn't go anywhere, but looks quite vulnerable as it trades near the 2-year lows. If you are a subscriber, please stay tuned for a separate email and separate videos that we're going to be covering many of these various stocks and securities. If you're not a subscriber, then consider signing up by going to MasterChartsTrading.com, click on sign up for one of the products. I have two packages, or rather two products and two packages: trading indicators, newsletters, and together trading indicators and newsletters, and I will explain what those indicators are. So let's look at first S&P 500 on daily time frame. So when I say daily time frame, this means that, see where it says, where I'm hovering, it says 1 day. 1 day means that each of these candlesticks, you can see this green and red candlesticks, this is 1 day's worth of activity. If you really get freaked out or worried about candlesticks and just don't really want to bother with them, you can also change the chart to line chart. And this is line chart currently. So on line chart, we are only looking at closing prices. However, candlesticks help quite a bit, I think, and they make you make the decision of whether to buy or sell much easier. So on this chart, what we're looking at is S&P 500 continuous futures on daily time frame with my indicators on them. You can see them. There's a green, blue, red, and yellow lines on this chart. These are my indicators. They basically show good levels, at what levels to buy, sell, take profits, etc. And again, if you're interested, I can explain. There are many training videos. Additionally, there is you can send me a message by going to Master Charts Trading, click on contact, and contact me there. So what do these lines mean? So usually, or rather, the way I look when I'm trading stocks, these are stocks. S&P 500 is a stock. When the stock has closed above the blue support resistance line and hasn't yet closed below the yellow support resistance line, we're going to say that we are in a bull market. We are going to ignore pretty much everything else and just do that. So that statement, when I said we're going to say that when the stock is above the blue line, has closed above the blue line, hasn't yet closed below the yellow line, that's all we need to know. And again, this is specifically for stocks. If we're looking at Forex, commodities, cryptocurrencies, gold, etc., the rules are somewhat different, and I will explain them as well when we get to gold. So on this chart, up until quite recently, up until April 29th, where I'm hovering right now, it says bear market in stocks starts on April 29th, 2022. So until that moment, I would say that we were still in a bull market. But then since that moment, we have switched our direction and we're now in a bear market. In a bear market, also known as a downtrend, we want to be thinking about selling. You can sell existing holdings. You can also sell short. In other words, you can also buy puts. In other words, you will open, or rather, you will express your bearish bias. You will express your conviction that the stock, in this case, will continue lower. Indeed, this is what happened after the bear market began on April 29th of this year. We made a new low, and then we rallied. So where did we rally to? We rallied towards this red support resistance line. Again, that's all I needed really to know about anything. And these were the short signals. So the short signal is when a stock moves above the red support resistance line, even for a second, it touches it, and then close below it. Additionally, you can also say that the stock could close above the red support resistance line and then close again below red line. That's also a signal. Now, if here in late May of this year, early June, this S&P 500 continued higher and closed above the blue support resistance line, I would say that the bear market is over. But we haven't done that yet. And indeed, we actually made a new low on 16th of June. So currently, we're basically bouncing within a bigger downtrend. So if that statement didn't make sense, again, you can also contact me right here on TradingView.com. This is a TradingView.com interface. Look for me at MasterCharts. Right this instant, we made a new low in June, 16th, 17th of June, and then we kind of rallied and then traded sideways. Now, today's close was, I think, quite bullish. Additionally, because of the way this security behaved right there on the 14th of July. I'm going to zoom in a little bit. We printed what's called a doji hammer candlestick. So doji just means that it's a very thin real body. You can see that the red body is very thin, but we have a huge, relatively large tail, or you can also call it shadow out of the bottom. What did that mean? That means that the stock continued lower, but that by the end of the session, yesterday on 14th of July, the bulls, or people who think that the stock market is, in this case, oversold, came in and started buying. And they kept buying until the close of the session on 14th of July. And then in the morning today, on 15th of July, they started buying and never stopped. So the stock, in this case S&P 500, continued higher and closed basically at the high of the day. We can also look at the same chart on the weekly time frame. So what does the weekly time frame mean? Right here where I'm hovering, it says W. So W means each candlestick is 1 week worth of activity. If you're trading with my indicators, notice on this chart they're the same thing, green, blue, red, and yellow line. However, if you want to trade on weekly chart, on daily chart right here where I'm hovering, it says, if you click on this wheel on my indicators right there where I'm hovering, it will say input and it says length 250. That is for daily. You can actually read it right there. Daily chart, use 250, weekly, use 52. So we need to make sure that when we're trading on weekly chart, we use length as 52, and indeed it is 52. Okay, great. So looking at this weekly time frame, we can see that this is a weekly hammer candlestick. So a hammer candlestick is just that. It just looks like a hammer. It's got a nice small body and a very large shadow of the bottom. So what does that mean? So weekly means that the 5 days, Monday through Friday, that there was trading for the security, technically it's Sunday evening to Friday evening, initially the price dropped pretty significantly, but by the end of the week, basically all of the losses were erased, and we closed very close to the open of the week. So we opened at 3902 or so. We can actually read it, exactly at 3900, and we closed the week at 3866. So we're pretty close to the open. This means that the bulls, or people who think that the stock market will continue higher, were mostly in control of the action. Additionally, if we look at this action, we can see that we've been moving lower pretty much since, well, we can say that since beginning of the year. And now we have made a hammer candlestick basically at the bottom of this range. So indeed, this is a good sign. Additionally, you can see from previous 2 weeks, we also had shadows out of the bottom here, and now we have 3 shadows out of the bottom. So generally speaking, this is a good sign. It means the bulls are in control, or at least the bears are sort of giving up right now. Bears meaning people who think that the stock market will continue lower. So let's see what happens, but I am relatively optimistic that we will see a continuation of this rally. So where would this rally take us? It is quite reasonable to expect something similar to what we had here in May. We had a low on the 20th of May and a rally towards the red support resistance line. At that point, we had to make a decision. Do we want to do nothing or sell short? So some of the my clients actually took the signal, and they, made good money here basically. By this time, I would potentially have at least partial position still, but I would have definitely taken profits. I would have taken profits right there on 24th of June, potentially on the 6th of July, and definitely today. So what's happening right now, I think we can expect a rally to continue towards the strong resistance. So strong resistance, it is marked by this red support resistance line at 4077. These indicators are available for you. They are available for TradingView, but you have to register on my site, MasterChartsTrading.com, and I will open the door for you on TradingView. Again, if it doesn't make any sense, let me know by chatting with me or sending me a message. You can also comment on this video on YouTube. Looking at Dow Jones, very similar picture. The correlations between Dow Jones and S&P 500 are huge. So it is no surprise that we had a very similar picture here in late May, early June. The stock market rallied towards the red support resistance line. If you took the signal, the short signal, congratulations, because it was just a nice collapse here, and very quick as well. So you could have used relatively short-term put options, and you would have come up, very nicely ahead. Again, right this instant, I would have definitely taken profits, potentially closed the entire position. But Dow Jones, again, might continue together with S&P 500. There's a strong possibility of that towards the 3,200 levels. So looking how much that could be is around 3% higher, potentially higher actually. So we will need to see to what price levels will this rally take us. At what point do we want to, or do we even want to open a short position? Because if we continue a little bit higher, we're not that far off from bullish levels. We're 9% away from bullish levels. So when or if we get to the red support resistance line, which is at 3,200, we will think, do we want to sell short again, or do we want to do nothing? Because the bullish levels are actually not that far off. It's only 9% away. So again, we need to think about that and make a decision once that becomes an issue. NASDAQ is a bit weaker. However, it has been a bit weaker since earlier. So NASDAQ entered bear market in March of this year. an absolutely excellent short signal right there where I'm hovering on 8th of April. You just made a huge money here if you sold it short. Again, by now I would have definitely taken profits, potentially closed the position entirely, and we can expect a rally to continue if S&P 500 continues higher. Nothing is guaranteed in this business, obviously, but it does look like a rally will continue. Once again, for now, we're treating this a rally as a counter trend rally. So the trend is down, but the rally is up. So we're thinking, okay, so now we're here in late June, we were quote unquote oversold. And now we have what's called a relief. So we are relieving this oversold condition by, and the stock market is moving higher. By the time we get to this red support resistance line, which is currently at 13,205, 13,205, the NASDAQ would be overbought, but within a bigger downtrend. So again, when or if we get there, we'll make a decision. Do we want to sell short or do nothing? The same general picture is happening to Russell 2000. The Russell 2000 is significantly weaker than all of the above that I just described. Russell 2000 entered bear market where I'm hovering on January 18th, 2022. We had several excellent opportunities to sell short. Last one was just tremendous. Right there where I'm hovering, 5th of April. If you sold it short, congratulations. I would have taken profits, but actually, you see how weak it is? We still haven't even gotten to this yellow line. We were rejected there twice. We were rejected there on late June and once again on the 8th of July. So let's keep watch. Let's see what happens. S&P 500 is obviously stronger. Dow Jones is stronger. NASDAQ is somewhat stronger, but the Russell 2000 is quite weak. It's lagging its peers. So let's see what happens, and the relief rally will happen for all of the major indices because of the correlations. Correlations are huge between different various stock indices, and I don't just mean in the United States, worldwide. So if a rally happens, it will be pretty much worldwide. Additionally, good news came from the junk debt, so high yield bond fund. This is JNK. This is daily time frame. Once again, it's on a daily chart, so each day, each candlestick is 1 day's worth of activity. We hit multi-year lows. Actually, let's go to weekly charts because it's just easier to see right now for the high yield bonds. So you can see how terribly we unraveled from 18th of January when the junk debt entered bear market. According to my system, where I'm hovering right now, it completely collapsed. Now, the week of 13th of June, I think if you listen to my previous videos, I was like, this looks possibly like we're bottoming. It's just the way this candlestick looks, and also from the week of 6th of June to the week of 13th of June, there was this big gap here. I'm going to zoom in a little bit. So you can see there was the gap, opening gap right there where I'm hovering. But the downside really didn't go anywhere. So in other words, the bulls kind of bought out this candlestick. So looks like the low was indeed put in here on the 13th of June, and now we're rallying. So I'm looking at this candlestick on the 11th of July this week, and it does look quite bullish. This looks like a candlestick that would be called a hammer candlestick, or at least hammer-like, because of the shadow of the bottom, and we have a green candlestick. In other words, the open is above the the close is above the open. So bulls were in control of the price action throughout the week, until the very end of the week. So overall, a good looking candlestick. We will once again continue monitoring this. So it's very possible that we will continue higher from here. Why do I say that? Is because junk debt and stocks, you can see this blue graph here in the bottom, it's a correlation coefficient to S&P 500. By and large, junk debt moves together with stocks. So if junk debt have indeed bottomed, then it makes perfect sense for stocks to continue higher from here. So let's watch for this oversold bounce. And once again, this is for now. We're treating this for now still as an oversold bounce within a bigger downtrend. If or when we get to this red support resistance line, we will consider selling it short. I mean, I wouldn't want to sell short junk debt because of it's just not really a great security, because there's a large amount of dividends coming in, or coupons. So I would just do nothing to it basically. But we need to look at intermarket relationships between S&P and high yield bonds to make a decision of what we want to do. So looking at treasuries, so first of all, I'm going to show you this chart here. This is called dynamic yield curve. So what the heck is that? So dynamic yield curve here on the left, it shows current yield on various securities. So here on the left, we can see 3 months, 2-year, 5-year, 7-year, 10-year, 20, and 30-year treasury bonds. Bond yields. So up until relatively recently, I'm going to go back a little bit, the yield curve should look like that. The low or the short-term yield should be lower than the long-term yield. So if you can kind of read it, it's sort of bad, poorly, it's a small lettering, but it says normal. So up until relatively recently, we had a normal yield. Now, as you know, Federal Reserve started raising the interest rates, so the bonds have been selling, yields have been rising. They have been rising unevenly. And eventually, right there, on March 25th of this year, we had what's called a flat yield curve. So it's kind of like, longer term yields and the short term yields are pretty much the same. If we continue further, just very recently, literally 2 days ago, on the 13th of July, we have what's called an inverted yield curve. So how did that happen? So I'm going to go back and forth a little bit. Right there where I'm hovering, the 2-year yield just went above the 5-year yield. In fact, it went above the 10-year yield as well. So think about it, the 2-year yield is higher than the 10-year yield. It actually doesn't make sense. However, this is still a partially inverted, because 30-year yield is still somewhat higher than the 2-year, and the 20 is the same, it's still higher than the 2-year. Now, if we go back in time and look at, for example, year 2007, February 2007, we had actually completely inverted yield curve. So yield curve here was 3 months yield was higher than the 30-year yield. Now, that makes no sense whatsoever. What happened afterwards? We had a bear market, significant selling. The same thing happened right there, somewhere around March of 2000. We had short-term yields higher than the 30-year yields. So again, same thing happened afterwards. We had a pretty strong move lower. So once, right this instant, we have what's called partially inverted yield curve. It's bad, but it's not horrible. So let's see what happens during the meeting that Federal Reserve will be having on the 26th, I believe, of this month, and let's see what they decide and where the yield curve will go from there. But overall, when the yield curve inverts, bad things could happen. Looking at the just regular Treasury bonds. Here's TLT, Treasury Bond Fund. We sold it short here as early as January, February, another opportunity in March for a very nice move in our favor. Right this instant, again, we're bouncing, but we're bouncing within a bigger downtrend. What does that mean for the yields? Invert your thinking. So if we're selling short bonds, we need to be buying the yield. You can't really buy the yield in the United States. However, if you have if you live outside the United States, you can trade the yield using the contracts for difference. So if you bought it back here in February or March, then you had a very nice run in your favor. And now we kind of pulled back from the highs. This actually, I believe, 20-year highs in the yield. We pulled back, and let's see what happens. I think yields will continue higher towards new highs. So let's keep an open mind and see what happens. Looking at dollar, this is dollar index, had a, well, I can only call it enormous. So enormous run for the dollar. If you're a subscriber, and many of my subscribers actually has been with me, paid subscribers were with me since 2016. So people understand longer term sometimes is actually better. Trading on a small time frame doesn't always yield good results. The longer you hold, sometimes the better. So looking here, in July of last year, literally a year ago, the breakout occurred. And how do I know the breakout occurred? I know nothing about nothing. I ignore everything. So back here in July of 2021, if you listen to my videos, it's like, okay, this is it. We see a breakout. We need to be buying the dollar. There is the breakout, 13th of July 2021. You had several opportunities as late as 16th of September 2021 to buy the dollar. How do you buy the dollar? You can use UUP as a ticker symbol. I don't like it, but you can also trade Forex. For example, you can sell the euro versus US dollar. You can sell it short, but it's a little bit for more advanced traders. If you need my help, again, trading Forex, send me a message or make a comment and I'll get back to you. As of right this instant, we had an enormous run. Let's look at it on the weekly time frame. Here is that enormous run. Again, breakout July 13th, 2021. For the Forex currencies, it's it's just enormous. 17% run in our favor, 20-year highs, 20-plus year highs versus multiple currencies. This is a basket of currencies. So is the dollar topping? It is quite possible. The dollar could be topping. Perhaps the yield hike by the Federal Reserve is already priced in. We don't yet know, but it is possible that we're topping. And let's look at gold, because gold could be sending a signal for dollar bulls to kind of be careful, basically. So this is gold futures. We traded gold, and I personally actually shorted gold. I shorted gold right there on 30th of June. And I closed my position recently with a relatively nice gain. So how did I short? I bought puts. I bought put options. Again, if you don't understand how to trade options, just send me a message. It is super simple and I will explain it. Right this instant, if the dollar has indeed topped, then we'll need to look at gold to see where this whole thing is going. Why do I care about gold? Because gold is traded in dollars, so it's XAU, gold divided by USD. If the lower part of this equation is going to get weaker, then this currency pair, or gold in this case, will move higher. So potentially we may have reached the low. So again, we need to be watching for a bounce. Where will this bounce take us? We need to watch. Do we want to sell it short? when or if we get to this red support resistance line, which is currently at 1828. Alternative scenario is dollar has not topped and will continue higher here. If the dollar hasn't topped, then gold could indeed make a new low. So we will be watching it carefully in the weeks ahead. Looking at Bitcoin very briefly, really nothing has happened with Bitcoin. This is a weekly time frame for Bitcoin. In other words, each candlestick is 1 week's worth of activity. We sold it short multiple occasions. Several subscribers got a very nice move. I mean, this is 58% move in your favor, especially if you sold it short here in April of this year. It went from 46,000 to 20,000. It is currently trading next to the lows. Potentially we're seeing a hammer candlesticks. Once again, hammer candlesticks are bullish in nature, so maybe this is a hammer candlestick of this. This is a potential weekly hammer candlestick. Let's see what happens in the next 2 days. Bitcoin is traded 24/7, so we need to wait until Sunday to make a decision if we want to be covering our short positions, I guess. All right, that's it for this week's recap. Head over to MasterChartsTrading.com, click on sign up, and sign up for one of the products. Again, if you need the trading indicators, these lines on the chart, they will greatly simplify your trading experience. Simply sign up for that. They're $29.95 per month. I think it's a steal to basically stop worrying about the news and just trade. If you need my newsletter, so again, I send out alerts. For example, for Bitcoin, this was an actual alert. If you were able to sell it short, great. We trade all kinds of securities. You can see that for the subscribers, I'm going to be covering a bunch of other securities that we trade, both on the bullish side and on the bearish side, up and down. We really don't care. We just need to know which way the market is going. And again, with my indicators, it's super easy to figure that out. I think the best deal is to get trading indicators and newsletter together. It's currently at $59.95 per month, but if you haven't heard, we have inflation. So unfortunately, these prices might actually rise even further because I need to cover my expenses for the running of the website, etc. So consider signing up because this could be going up again pretty soon. If you need a one-on-one assistance, then sign up for the VIP access, 60 minutes one-on-one screen share session per month, $259 per month. Again, this is not a bad deal. And then you also get all of the indicators and both newsletters. That's it for this week's recap. If you have any questions, please let me know. Thank you for watching and have another great trading week. Bye-bye.